Ladies and gentlemen, good day and welcome to Lakshmi Machine Works Limited Quarter 4 of Fiscal Year 2021-22 earnings call hosted by NSDL. As a reminder, please note that participants' lines will be in listen-only mode and there will be opportunity to ask questions after the brief by the company officials. Should you require any assistance during the conference call and to raise questions, please signal the operator by raising hands. Please note that this call is being recorded. This is Samir from NSDL. We have with us Mr. V. Senthil, Chief Financial Officer, and V. Lakshmi, Senior General Manager of the company. Over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining Lakshmi Machine Works Limited earnings call for Q4 and for the full year ended 21-22. We will have a brief about the overall performance of the company for the quarter ended and for the full year, followed by an interactive session. To begin with, let me explain about the overall performance of the company. Then we'll proceed with segment performance and then on the consolidated performance. The financial results have been posted on the company's website and hope you all had a good opportunity to go through the same. I'm happy to share that the company achieved the highest ever turnover of crossing 3,000 crores, which is 84% higher than the year 2021. This milestone was achieved amidst a lot of challenges, starting with COVID during Q1 and ending with the conflicts, geopolitical issues as what we have experienced in Q4. The major challenges was faced by the supply chain due to disruption of supply, spike in prices, raw material. In spite of these challenges, we have overcome to achieve the milestone of crossing 3,000 crores of turnover. Let me get down to the numbers. The total turnover stands at 3,116.76 crores as against 1,638.88 crores for the year, which is an 84% increase. The profit for the company before exceptions and tax stands at 254 crores during the year FY21-22 as compared to 96.31 crores for the year 2021. And it's a growth of 164%. The huge rise in cost of inputs has eroded EBITDA to some extent. And for the quarter ended March 22, the company achieved a turnover of 940.50 crores as against a turnover of 651.60 crores in the corresponding quarter of Q4 for the year 2021, and which shows a growth of 44%. The turnover between Q4 and Q3, there's a growth of 8%. The EBITDA is 292 crores for FY21-22 as against 125.75 crores for FY20-21, which shows a growth of 133%. And for Q4, FY21-22, the EBITDA stands at 100.47 crores as against 53.74 crores of Q4 of FY20-21, which is a growth of around 87%. The company's profit after tax increased to 179.68 crores as against 47.46 crores for the same period last year. We would like to now go on to division specific. So TMD, for TMD, the turnover for the full year stands at 2,316 crores. And we have an order book of around 6,800 crores, and orders have been lined up for execution over the next 16 to 18 months. We would also like to say that in the order book, the share of the projects have been quite significant in the current year, and it stands around 65 to 70%. As you know, the way TMD has performed between the 2 years, the year ended March 21, we used to I see a lot of modernization projects come out, but in the current year, we see a lot of end-to-end full projects has matured, and that has resulted in a quite a good order inflow during the current year. Even with respect to exports, we have seen a 100% increase in exports as well, and export markets are also doing quite well. The ratio of domestic and export and spares stands consistently at around 50%, 25%, and 25%, even in the current year. In the current year, we have experienced huge increase in cost, and we have taken cognizance of it and increased our prices as well in Q3 of the year which has just gone by. And we did see that in Q4 there was a price stabilization, the cost stabilization which was happening. But however, by the end of Q4, because of geopolitical issues and the COVID-related issues, we see a lot of headwinds on the cost aspect, on the logistics aspect, and also on the availability of material. Like we said, we're doing all what we can to ensure the supply chain and delivery to customers continue. We have also note that in Q4 we have seen the details of PLI scheme for textiles being published, and there is considerable investment being planned in the textile value chain, which is a good sign for us. We also note that there are short-term issues with respect to cotton prices and availability of cotton. However, these are short-term in nature as what we see. We are currently running at full capacity, and as you can see, between Q3 and Q4, there has been an increase of around 7 to 8% in terms of top line for TMD, and our efforts on ensuring more deliverables would continue going into the future. Overall, since we have an order book, our focus is on delivery to customers and working on the supply chain. With respect to China, we have a turnover of around 221 crores. The margin, we did break even in the year, and the margin stands at around 2 odd crores. Here again, the challenge last year has been an extraordinary increase in logistics cost, where we have to deliver the machines along with freight, and that is the one which has impacted on the margin. And there we again have a 1-year order book going into the current year. The challenges there are quite evident with Corona and also the inability for the people to travel freely across 2 countries. We would also like to inform that during Q4, we opened our LMW Middle East assembly facility, and this got incorporated in February of 22, and the full operations for this company would start by June 22. I would like to now move on to MTD. For the full year, the turnover of MTD stands at around 690 crores. We have an order book of 2 months in this particular business. For the full year, the number of machines sold stands at around 3,250 machines, 80% of it being turning centers. Compared to last year, the increase in turnover is around 55%, and our segment price shipment to auto sector stands at around 49%, and the balance to non-auto sector. Here again, we have introduced quite a few number of new models in terms of the vertical machine centers, and that has supported us in terms of taking the turnover up. In MTD, the impact again has been on the cost and also the forex, as the import content in MTD machines are higher. We have done a price revision. Considering these 2 factors, we have done a price revision in MTD, which is effective from May 22, and that would cover all these cost increases, and we have been able to reprice the machines. Now going to the foundry, the turnover for the full year for external sales is around 78 crores. This represents around 20%, 18 to 20% of the capacity here, because the balance 80% is towards internal consumption, and there has been a huge increase in textile machinery and machine tool division, as what you have seen in the numbers, which I have just gone through, and right now we are running full capacity even in foundry division. With respect to ATC, we have for the full year turnover of 48 crores as against 28 crores for the same period last year ended March 21. We have over the last 6 months consistently worked towards reducing the losses. However, for the full year, there is still a loss of around 18 crores. We see that the export has picked up post-COVID, and here the focus would be to ensure there's a consistent turnover is getting delivered and also turnaround of this division. I think with this short note, we thank you for thanks for the participation, and now we can start the interactive session. Back to you, back to the moderator.
Thank you so much, sir. Could request the attendees to please raise hands if you would like to ask questions. After the communication of your name and unmute status from moderator, that would be me, you may go ahead with your question. For the people who would like to shoot questions, I would request them to please raise their hands. First person that we have here is Mr. Dixit. Mr. Dixit, you have been unmuted. You can go ahead with the question and also with your video turned on if you like.
Yeah, good evening, sir. So this is Dixit from LIC Mutual Fund. So, sir, my first question is because currently we are seeing that spinning mills are basically suffering from the margin volatility, right? So, what is the current scenario in terms of new order booking that is happening across the industry?
Mr. Dixit, do you want to complete all your questions so that I can answer everything together?
Yeah. So my second question is in terms of our gross margin. So historically, we have operated at closer to 40%. Our EBITDA has been around 11.5%, 12% kind of margins. But in recent 9 months, maybe in last 12 months, our gross margins have actually compressed to around 36%, and that has flowed down to single-digit EBITDA margin. So just wanted to know your outlook when we'll be taking price hikes, maybe to get back to our historical level. So these are the two questions.
Okay. Okay. I think I would definitely like to clarify that certain statements what we make here and the discussions in this call would always be forward-looking. Now, on the scenario of order booking, if we go back to last 3 years almost, that is I would say 18, 19, 19, 20, 2021. So 19, 20 and 2021, there was definitely a lot of compression in terms of the order booking which was taking place. So what we are seeing in the current year, which is just completed, which is 2021, there was a huge surge in the order intake, and that's what I said. Our order book on hand is close to 6,800. Now, would it mean that it is going to continue as it is? It's going to be quite difficult to give any statements around it, but we see that most of these investors, the promoters who have had plans, have already committed, and now it is they've lined up their investments and everything. So now it is more, the current year would be more moderated in terms of the order booking is what we would say. But to see similar kind of order booking would be quite, I mean, it would not be possible for us to comment saying that it would repeat. Now, having said that, we see the PLI schemes have come in, which is good. So we will definitely see order booking on a consistent basis. And now, as you mentioned on the cotton situation, we hope it is temporary with new supplies of cotton perhaps coming in later during the year. It will all ease out. So I wouldn't take that as a major concern. The concern would still be around a lot of global issues. Now, with respect to margins, I mean, yes, you are right. The margins have come down to single digits, and we have seen this consistently right from the post-COVID scenario of September 20 onwards. We have seen the prices have doubled. Most of the commodity prices have doubled, and they have not come down. From company perspective, we have taken two price revisions we have done. One in 20 September or October of 20 and other one in December of 21. And the full impact of this would be felt in Q2 of the current year, where all the prices, the impact of the price revision. However, we have to be again cognizant of the fact the scenario in last 2 to 3 months has again changed. Whilst we did see a slight dip on the commodity prices in Q4, that is Jan 22 to February or March, middle of 22. Subsequently, because of the issues on availability of a lot of things in material, the inflation has really taken a toll. So everything has again gone back up. Price have shot up again. So it would be very difficult for us to put a timeline to which the cost would come back. But we are actively looking at the costs, what is the impact of it, and how do we, try to absorb it or try to pass it on. That's an action what we take, and we continue to monitor it. But and same way, like I said, in case of machine tool business, we have done a price revision which is effective from 1st of May, because again the currency has, as you can see, the currency has weakened against the dollar, and most of it being imports, we have to pass on some of this to our customers as well, and that action is being taken. So this is literally now has become a very active quarterly kind of a scenario where we look at all these factors for us to do a pricing decision. Thank you.
Thank you so much, sir. Mr. Dixit, since your question has been taken, we would request you to please lower your hand. Going ahead with the next question, we have Mr. Hemang Kotaria. Mr. Hemang, you have been unmuted, and
hello, am I audible?
Sir.
Yes, you are.
Yeah, sir. Sir, I have 3 set of questions. First is I want a breakup of order book from domestic and export point of view. Second is in textile, new capacity will come at very later stage in FY23-24. So do you see the spare business will do very well in FY23 because new capacity is coming, I think 1 or 1.5 year down the line? And third one is any execution risk you are saying for the textile machinery division, be it logistical issues or be it manpower issues or any risk you are seeing to execute this 6,800 crore order book over a 15 or 18 months timeline?
In terms of order book, around 10% of the order book is exports, and as you can see, what we consider order book in exports are only those things with LCs, right? So 10% of that is with exports, and the 90% of the order book is domestic. Now, with respect to textile capacities and the spare sales, like I said, we have consistently been able to maintain and deliver, and the ratio of spare sales on the total turnover continues to be around 25 to 24%. That is the percentage on turnover we maintain, and we have seen a consistent rise. There is a demand which is getting created for spares, but at the same time, this is basically because the mills are running full capacity, so there is a requirement for additional spares. Not only because of delay in deliveries of 18 months and 24 months, but also because of inherently more wear and tear which is happening in the mills. So these are the two reasons. I think with respect to the risk, yes, there are 3 distinct risks I think we should be looking at. One is the fact on the entire scenario today from Q4 onwards has been a lot of electrical electronic costs related to electrical electronics have really gone up. Now the supply chain, as you can see, I mean, we operate in China. We know the situation in terms of the shutdown there. Nothing is happening for last 5 weeks to 6 weeks. So definitely we see that overall global supply chain is going to be impacted because of it. There's a long waiting time for us to even clear our own imports into China, where it is being held either at port or at sea or in the warehouses. So definitely, I think this would result. So what if you go back to what happened in 2020, we could see as we are coming out of COVID, the entire logistics cost shot up by 3 times to 4 times. So we see that also as a risk. So one is the fact that availability of material, logistics costs going up dramatically, and also mainly around the electrical electronic components. All those things is going to be a challenge, and that's the risk what we see in terms of delivery to our customers. How we overcome it, plan much better. I mean, we have done that over the last 1.5 years. I think the team is now well versed with trying to plan, but certain things it's quite difficult to overcome. Whilst we can secure our suppliers is perhaps still dependent on other markets for imports, right? So that would be definitely a risk. But as of now, we are handling it with proactively going back to them, giving them longer lead times, giving a commitment to them. These are the things what we are internally doing, looking for alternates. There are a lot of things which are being done around this to negate these risks. Okay. Thank you.
Thank you so much, sir. Thank you. Next is Mr. Mahavir Jain. Mr. Mahavir, you have been unmuted. You can also start your video if you wish like, and you can go ahead with your question.
Sure. Good afternoon, sir. Thanks a lot for the question. So, firstly, am I audible?
Yep, you're audible, Mr. Jain.
Thanks, sir. So I'm Mahavir from Avendus. I have 2-3 questions, set of questions. First is, just wanted to be sure in terms of numbers. So, can you, sir, throw the total order book and order book from TMD division and volumes in TMD divisions in FY22?
Yeah, please go on, Mr. Mahavir. Yeah.
Okay. So my next question is on. So what is the exact capacity which is coming up in TMD and when it will be operationalized? And third is, sir, in terms of, like we have expressed some caution in terms of cotton prices, going up because of shortage, and so is there any impact in terms of new orders coming up?
Can you repeat that question, please?
So my third question is, like we have expressed some concern in terms of cotton prices, continuously moving up, and so is there any negative adverse impact on the ground level in terms of new orders coming up? Are we seeing sensing any that kind of impact?
Okay.
That's it, sir.
Yeah. In terms of volume delivery, we have delivered close to 2 million spindles in 21-22. In terms of the order book, I would like to definitely clarify the total order book, which I said is 6,800 crores, of which 680 crores, that is 10% of it, belongs to exports. The balance 6,800 crores is around 6,100 crores is pure domestic order book. It's a mix of all the machines for which we have deposits with us, 10% deposit with us, and it's a very active order book. So we are looking at deliveries of this over next 18 months. and in certain small specific number of machines, perhaps a little bit longer. With respect to capacities, we are running full capacity, and as you can see between Q3 and Q4. Now, ours is a manufacturing sector, so the only way to increase capacity is to increase throughput. And there is a lot of things which goes into doing it. So that's where you see a increase of around 7% in terms of turnover. And it's a consistent work which has to be done by our manufacturing team to keep pushing for higher capacities. While we have planned for capex, it would take time. It will take at least 8 to 9 months for the new machines to come in, because everywhere the deliveries of mother machines takes longer. And subsequent to it, we are only bringing out balancing machines, right? So you would definitely see consistently we push the upper limits of turnover what we have reached. What we have reached already is the peak turnover in textile machinery business in the entire course of our historically, if you see, this is the peak turnover, right? So we will keep pushing the limits around there. Now, with respect to cotton prices, what I was mentioning is, yes, there is a concern which has come up very recently on the cotton prices and the price of yarn. However, what I said is that we don't look at it as a long-term issue because it is to do with availability, and government has also taken a lot of initiatives in terms of removing the duty content. But cotton issue impacting order inflow, I think cotton issue is a very recent one, and these are all capex machines where customers are planning really longer term, and they are taking cognizance of a lot of factors in terms of yarn demand. The fact that the PLA scheme itself, if you see around 24,000 crores worth of investments have got committed into the PLA scheme is an indicator that most of these investors, promoters of mills and the units, composite units are all looking at really long term rather than a short term phenomenon. That's what that's with respect to the impact of this cotton prices on the order book. Whatever order book would come in definitely would be based on much longer term planning of promoters and investors.
Thank you so much, sir. The next question would be from Mr. Ritwik Sheth. Mr. Ritwik, you have been unmuted. You can also turn on your video and go ahead with the question, please.
Yeah. Hi. Hello, sir. Good evening. Can you hear me, sir?
I can hear you, Mr. Ritwik.
Yeah. Sir, good, sir. How are you?
Good. Please go on, Mr.
Yeah. So first of all, thank you for doing a conference call and congratulations on a very good FY22. So few questions from my end. Firstly, on the textile machinery division, you mentioned in your opening remarks and subsequently that we have taken a price hike, and in Q2 FY23 you expect that the entire price increase will reflect. With some increase in after Q4 on the materials front, and subsequently we've seen decline also, do you think that we would need another round of price increase, or we are good with what we've taken a price increase in December 2021?
Any other questions, Mr. Ritwik, apart from this?
I have a few. So
you can give me one by one and then
okay, sure, no problem. Yeah, so that is on that. And if we need another price increase, do you think that we will be doing any price increase soon, or we'll wait for commodity prices to become less volatile and then take a call? So that was a subsequent question to that. On the demand, second question is on the demand front. You mentioned that spreads have been volatile because of cotton prices in the spinning industry. So have we seen any cancellation of any projects in the last 2 to 3 months because of this? And also, there has been increase in costs for everybody, like in terms of capex for the spinning industry, because of the increase in machinery, increase in other costs, and so on. So have we seen any cancellation because of all this, or any pause in the orders that we have received in the, say, last 2-3 quarters? Then my next question is on the machine tool division. We are at a similar level as we were in FY19, when we are like at full capacity, about 700 crores for machine tool and about 100 odd crores for the foundry. So I believe we have enhanced capacity after that. So what would be the peak turnover from the existing capacity that we can do, assuming that the manufacturing theme continues in India, and we are able to do good business in this segment as well. And last question is related to machine tools again. Any update on the 5-axis machine that was under testing, and when do you think that it can come to market? That's it from my side.
Thank you, Mr. Quick. Yes, so with respect to the prices, right now, yes, we did do 2 price revisions over the last 18 months. Now, like I said, we are looking at the cost and how it's impacting, and like you rightly also pointed out, there was a bit of a softening of the commodity prices and most prices in Q4, but again, it has reversed. Like I said, this is something which we will continue to monitor, and we will continue to our decision would be based on both what we are able to pass on to customers and something what we'll absorb, depending on whether we see this as a long-term or a short-term cost. We have tried, in fact, if you look at the history of the price revisions between the 2 price revisions, what we have done, we did try to offset some of the increase of quite some time, and then only we have taken a price revision. So that policy would still continue. We will have to actively look at it. It's impossible for us to predict today what price, what would be the cost of it, what is the cost impact, and at what point of time would I be increasing the price. It would be very difficult for us to predict. With respect to the capex, and like I said, today the order books are full. People are looking at long term. So specifically, there has been no. We are seeing further orders flowing in. Whilst you are talking about cancellations, we are talking about orders flowing in consistently on a month-on-month basis. So we are not talking of cancellations, but we are talking of order inflows. With respect to machine tool business, yes, we are absolutely right. We have increased our operational floor space last year. And like what you had mentioned, we are at around 690 crores, almost touching 700 crores. Definitely, there is enough capacities available for another 25-30%, and that has been made available through capex investment for machine tool business. And again, there with PLI in manufacturing having come in, and that also at a very good, it's a very high number. I'm sure that would go to support Made in India, and also the manufacturing sector with export within the manufacturing sector would do quite well. And that's what we are seeing. General engineering, exporting of machine components and things like that are really doing well. So we are able to be prepared. We are completely prepared with manpower, with material, with space, everything to make use of that. With respect to the 5-axis question specifically, I think we will let you know as soon as it's commercialized. I mean, we will definitely inform you as soon as we commercialize the machine.
Thank you so much, sir. Next person with a question we have is Mr. Rishabh Shah. Mr. Rishabh, you have been unmuted.
Yeah, hi, Mr. Sandil. Good evening.
Good evening. Good evening.
Yeah, sir. I just want to understand. Last 1.5 years, have been really good for the textile industry. So, from a industry perspective, since you're talking to your customers, what is the sense that you're getting? Is the textile industry at an inflection point? Like if I say, the best is yet to come for the textile industry, would that be correct? And my second question is with respect to the turnaround in your TC division. If you could share some more detailed strategies or some order book or some, anything they're talking with the government or any, major order that you won. If you could share some more details on that. How will this be, how the turnaround will be more sustainable?
I think it's thank you for that question. Anything else, Mr. Rishabh? Or
So far, I have only 2 questions.
okay, so yeah, I think you have put it very nicely to just the best is yet to come. Definitely, if you referred to last 1.5 years, but we would even take it back a little bit further. We also always had a challenge with respect to the spinning industry. To even if you say 4 years back or 5 years back, including with respect to customers getting funding and many challenges, markets, raw material availability and everything. But definitely the fact remains that a lot of things have happened in last 1.5 years to 2 years. I think the fact that even to start with the support which has been given by the government in terms of the new RODTEP which is applicable, aligning of the GST rates, and also the fact that because of the geopolitical reasons, the China plus one factor, what people talk about, where the demand has come back to India. I think all of this are the factors which has resulted in the spinning industry gaining stability. Like I mentioned also previously, there has been quite a tough time the spinning industry has gone through between 1920 and 2021. I mean, it is unbelievably a tough time, and whereas the capex investments were all kind of held back during this time. So definitely, what we currently see is that they are coming and they have committed, and that is what is reflected in the order book, where they have all committed with their plans and putting in the deposit for them to roll out. So today, a new person coming in 4 machines is ready to wait 18 months for delivery. That means that is the confidence they have in the sector. Now, the turnaround story is, yes, there is still a lot of support which is being given in terms of the targets also being set in terms of export targets on garmenting and things like that. We have got FTA being entered into with Australia, with UAE. So I think all these are definitely helping our customer, right? The people who are either in composite or in composite mills or in the end garmenting, and so who is our spinning customer's customer. So long as they are doing well, I think it would be a good turnaround story which we look forward to, and I think that's what we should look towards with respect to textile industry. I mean, we are on a very strong footing, and there is nothing right now which says it is going to be a challenge. The challenge is definitely around whatever we spoke previously with respect to availability, material, and geographies. Economies are some economies are not doing well. All that is there, but still, this is a long term. It is definitely looking quite strong for India in textile industry.
Thank you so much, sir. The next person we have is Mr. Hiten Boricha. Mr. Hiten, you have been unmuted. And also, we would request all the previous people who went ahead with their questions to please now lower their hands.
Hello.
Mr. Hiten, over to you.
Sir? Hello.
We can hear you, Mr. Hiten. Please go on.
Yes, sir. Okay. So I have 2-3 questions, sir. My first question is on the number of spindle. You mentioned that we have sold 2 million spindles in FY22. So just wanted to know what is the number in FY20, what was the number in FY21? The reason I want to asking this question is just wanted to understand what is the volume growth or is it a realization growth? That's question number 1. And second question is, you mentioned that we are running at full capacity currently. So just wanted to understand, are we planning any capex for coming year and how would be our growth would look like in textile segment? That's the 2 questions, sir.
Yeah. Yes, I think, we are planning balancing capex as what we call it. So we would definitely be looking at capex additions because we need to be running all engines in terms of various manufacturing activities have all to be in full utilization mode, right? So yes, we will be we are planning capacities and adding capex to do that. With respect to the 2 million spindles, what we have delivered in FY22, I think if you go back the previous year, if the numbers are right, I mean it would be 40 to 45% less than this 2 million. That's how the numbers stand. I mean, I hope that answers your question. I mean, we have seen close to 50% growth. That is, last year's turnover stands at 1,186, which is 50% of the current 2,316, right? So it would be pretty much under the same ratio in terms of spindlage also.
Thank you so much, sir. The next person we have is Mr. Akshay Kothari. Mr. Akshay, please go on.
Thanks for the opportunity. So I wanted to know regarding the order execution cycle. So what would be our order execution cycle in both of the divisions? And second question would be regarding the revenue recognition policy. So you generally said that 10% of the deposit amount we get beforehand only. So when would we the other 90%? What are the stages at which we receive it? My third question was regarding the competitors. So who are our competitors? And also our customers' competitors, like the countries competing with India in spinning industry. And lastly, the customer concentration which we have. Yeah, that's it from my side.
The ordering cycle in textile machinery division, like I already mentioned, the order books are quite long. That is 18 months is what is the order book backlog. So you place an order for the machine today, will get delivery in 18 months. With respect to machine tool business, it is much shorter. It is around 2 months. That's how the ordering cycle is. With respect to revenue recognition, textile machinery division, where we take the 10% deposit, the balance 90% is paid before delivery, and on receipt of the money, the machine getting completed, we invoice it, and then the revenue gets recognized. So this 10% is not going to be recognized in revenue. It would be held as a liability in the books of accounts till the balance 90% is paid, and it becomes 100% for the machine value. I think I would not want to touch on the competition. I think you have enough information available out there for you to do a analysis by yourself. With respect to the spinning, I mean, if I understand you right, your question is where are all the spinning concentrated? I think in terms of spindlages, number one spinning capacity in the world is at China, followed by India. And then you have countries like Bangladesh, Indonesia, Turkey, Vietnam, where we operate. These are our key markets, so to say, as far as spinning is concerned. Okay.
Thank you so much. The next speaker with the question is Mr. Anik Mitra. Mr. Anik, you can go ahead with the question, please.
Hello, am I audible?
Yes, you are audible. Yes, please.
Good afternoon, sir. Congratulations for a very good set of number. Sir, I have a few queries. First of all, sir, what is the average life of a spindle? Second one is, sir, China is a major contributor to Indian textile machinery industry. So can you throw some light, like what is the share of China in Indian textile sector? And what is your market share? Sir, third one is, sir, your advanced technology center segment is yet to arrive break-even. So is there any timeline you'd like to provide?
Can you repeat that question, please? On
advanced technology center, this segment is yet to arrive break-even, right, sir?
Yes.
Yes, sir. So any rough timeline, sir, when we can expect this will arrive break-even?
Yeah. So I think with respect to the life of the spinning machines, I mean, these are all clearly long life machines, anywhere from 10 to 15 years, and in certain cases even 20 years. It depends again on what type of machine these are. The technology is the one which keeps changing drastically. Whilst a machine can run for 15, 20 years, that's not an issue. Is what is the output, what is the energy consumption around these machines, and that's where we come in with respect to the latest technology, what we keep introducing, so that customers can upgrade the machines and are able to produce, because at the end of the day, yarn is a commodity, and you need to produce yarn at the most cost-effective price to be competitive in the market. And so whilst there is life, we should also understand that there has to be technology which has to be upgraded for the customers to sustain in a very competitive environment. With respect to the machines import, I think there are imported machines. Our market share on an overall basis in India would be around 70% to 73%. Balance machines coming from various competition and perhaps from China as well. With respect to ATC, I think the first and foremost point to understand within ATC is that these businesses are business with long-term contracts. So when we see that there's an order book, especially the order books on export side, are all with delivery where we have contracted for next 4 to 5 years. As you can see from Q4 and also from Q3, we have been able to increase our turnover and also been able to substantially bring down our loss in that particular unit. And the effort would be to definitely break even, and that's been the guideline, and that's been our what we are consistently working towards. So we've got order books in there, upwards of 300 odd crores, and our only challenge would be as to when we deliver, because these things are all based on pull-offs, where the customer would say that, okay, kindly deliver this. So COVID has really taken a toll on it, where all the orders were pushed back. And now from last 1 year, there has been quite a good demand. Rather, people are pulling as much of material as possible. So that being said, I mean, we are working towards it. You can see it between Q3 and Q4. It is definitely different from Q1 and Q2 of last year. So we would hope to break even in the coming year. Thank you.
Thank you so much. Sir, are we allowed to take more questions?
Yeah, I think we still have 5 minutes.
Okay. I think we can go ahead with 2 or 3 final people who have raised their hands. The next person we have is Narisha. Please go ahead with your question, please. You have been unmuted. I'm getting no reply from Kinnari. Okay, so since there's no reply, we can go ahead with another person that has raised his hand. We have Mr. Manish Goyal. Mr. Manish, we can have the question from you.
Yeah, very good evening, Mr. Santil.
Good evening, Mr. Manish.
Sir, a few questions. First, on the textile machine capacity, you did mention that we are doing debottlenecking and installing the balancing equipment. But just want to know, like today, we are at run rate of 200 crores per month. How much more can we do going forward? Number one question is that. Number two, we are putting up assembly facility in Middle East. So just want to know what's the rationale, and will it be only for ring frames, or it will be more products on the preparatory side as well, and what will be the capacity over there? Number three, in terms of new product introductions at both preparatory stage as well as post spinning stage, if you can share new product launches and how are we faring there. And then on PLI, just want to clarify that a lot of investments have been planned on man-made fiber and technical textiles. So, like, how do we see demand for our products emerging on the basis of this? And last question, what will be our cash and cash equivalent? Because I believe some part of it is getting clubbed into current assets, which is not reflected in investments and the cash. So because you have such large advances of 620 crores now, so I believe your actual cash and cash equivalent would have gone up more than 1,000 crores. So these are few questions, sir. Thank you so much.
Yeah, thank you. Yes, I think absolutely right, Mr. Manish. We are averaging right now close to 250 crores per month in terms of TMD. Like I said, this is an engineering thing where we try to use the machines, run the plant full capacity, and it's an incremental work. So even if we were to bring in additional capacities, you will see this growth quarter on quarter. I think that was the way I would like to specify, to say that, okay, to what number we can get, because we are putting in a lot of levers to get the number higher, because the main thing for us is to ensure that we deliver faster to customers, right? At the end of the day, we are all interested to ensure faster delivery, and that's why we focus on that. We have to work around within or work through the constraints rather, and you will see, and already you have seen between Q3 and Q4, and you will see further improvement in Q1 also. This is point number one. With respect to new product, yes, I think we have a pipeline of products which will come out during the current year, which will commercialize. I think some of them are towards automation on our spinning machines, which would really help in reducing the number of people who are going to be working between the spinning side of it. So you've got preparatory side and the spinning side. So working towards automation on the spinning side. On the preparatory side, we did introduce new machines on the draw frame segment, which we have introduced. And on the machine tool side, we had introduced what we call vertical machining centers. So we have a new set of series called J1, J2, J3 series of vertical machining centers, and these are the new product introduction with respect to spinning machines and also preparatory machines and machine tool. With respect to the PLI scheme, whilst focusing on man-made fiber, it also focuses on end product blends and everything. So there are customers who are investing in the spinning segment under PLI scheme as well. So we have at least a handful of customers who have placed orders and who come under the PLI scheme. So I think when we talk about man-made fiber, we are talking about synthetics. So if leaving the technical textiles out, it is still synthetics, and our machines, the spinning machines, are capable of running both cotton and man-made fiber. So we don't see much of a challenge around that. With respect to the cash and the cash equivalents, you're right. I think the overall cash is around 1,500 odd crores, what we have, and of which, like you rightly mentioned, around 600 odd relates to customers. Okay, thank you.
Thank you so much, sir. Do we have time for more questions, or this is where we conclude, sir?
I think we can take one more question. I mean, we still have a couple of minutes.
Okay, perfect. Thank you so much. So the next person who has raised his hand to put the question forth is Mr. Sanjay Shah. Mr. Sanjay, we have you unmuted. Please go ahead with the question, please.
Yes, am I audible, sir?
Yes, Mr. Sanjay.
Yeah, thanks for opportunity, sir, and appreciate congrats on good numbers. So I have two questions. One was regarding what percentage of cost increase in machinery in the hands of spinning industry right now after increasing the price. And my second question was, since you pointed out regarding yarn industry as a commodity, so going forward, this industry is facing lot of challenges regarding increase in prices, maybe from machinery up to then raw material, cotton, power, everything. So in that perspective, how do you see the growth of that industry and how that can impact our company in particular? Thank you.
So I think both of your questions revolves around the cost. Now, I think to understand the cost in terms of how it is and how it's getting passed on, I think we need to also understand where the costs have gone from to and where it has gone to. So if we were to take commodities and we were to take steel, we are talking about between July 2020 and the prices as we stand today. In last 22 months or so, it has gone up by 100%, right? If you were to take up logistics cost, it has gone up by 3 times. If you were to take polymers, specialty polymers, electrical, electronic, everything has gone up by, it's gone up extremely high, But when it comes to our price and how it is kind of impacted on the price revisions, what we give customers, we take a very fair view, and the overall cost of a project for a customer on an average perhaps would have gone up at a bit above 10% or so if it's a project investment. Again, this I'm talking about in an average. And that's where we said, whilst we are able to reprice, it has been a very hard task trying to catch up on the price revisions which keeps on happening. And it has been kept galloping so till now. So we'll have to just wait and see how it goes, how it will be going forward. Now, yarn as a commodity, definitely yes. Everything what you mentioned, the machinery cost in yarn cost is fairly less. I think the fact that the power, the cotton, the rate of interest, everything has got a play in the yarn price, right? And definitely now the challenge basically is, yes, there have been how it is getting absorbed, how this inflation can get passed on to the next person in the value chain in terms of the garmenting people, and then finally to the final customer. So definitely it is going to, we'll have to wait and see whether that cost increase is getting absorbed. We did see that it got absorbed last year. So post-COVID, when we could, the yarn price was doing quite well. So even today, perhaps people who have purchased yarn and keeping yarn stock, not yarn, the cotton stock are definitely doing better because they're able to still manage the conversion cost and earning whatever is the reasonable margins they get on the yarn price. I think that's what it is. We at the end of the day, everyone in the supply chain, in the value chain, is trying to bear some of it, but at the end of the day, we have to pass it on to the next person and then ultimately to the end customer. And that's what would happen unless the prices were to again temper and come down. And that's something which everyone is doing. Okay, I think that's it. Anything active, moderator? I would like to also say that inform that the information which has been presented during this conference is essentially published historical information or information already available, and it shall not constitute a legal or an investment advice or an offer to buy or sell securities. Okay.
Thank you so much, sir, for answering all the questions. If at all we have anybody with their questions left, they can send over their questions over the email. Thank you so much. I believe we conclude our meeting here. Thank you so much, all of the attendees, for joining in. Thank you.